A gas station worker became a millionaire by investing in the stock market. Would you believe this story? I bet you won't. Well, it is the true story of Ronald Reed. Ronald Reed's investment plan was basic. He adhered to his own beliefs and fundamentals, focused on long-term investment by capitalizing on compounding effects and only investing in stocks he was well versed in. He mostly invested in blue-chip equities such as Procter & Gamble, J.P. Morgan Chase, General Electric, and Dow Chemical Company, among others. Ronald's frugal lifestyle added to the story's uniqueness. Despite his affluence, he maintained a humble lifestyle, driving a used Toyota Yaris and wearing used clothes. His neighbors and acquaintances spoke about his lack of consumerism and commitment to simplicity. Ronald Reed's story teaches us valuable lessons about financial management, personal growth, and wealth accumulation. It demonstrates that everyone, regardless of background or occupation, can achieve financial success with discipline, education, and long-term preparation. Hi everyone. Welcome to Level Up Dividends channel. As Ronald Reed, everyone can achieve financial independence and accumulate wealth. Step by step and letting time compound your money, you will eventually achieve it. Today, I'm presenting 3 high dividend growth stocks that could help you get closer to this dream and make it a realty one day soon. As Ronald Reed's like them, these stocks are well-established companies, very known and whose businesses are simple to understand. Now let's get into it. The first stock I would like to feature is UGI. The stock has a dividend yield of 6.04%, which is pretty awesome, and it is considered safe with a dividend score of 60. The dividend growth is a nice 8% per year in the last 5 years. At this rate it will compound rapidly in the future, and the yield on cost you could have in a couple of years, believe me, could be astronomical. The 20 dividend growth rate is not bad either, at 7%. If you're not convinced yet, please have a look at the record of the dividend payments. UGI has been paying dividends for 139 years. Yes, almost 1.5 centuries of dividend increases. Very few stocks can do the same. You could argue that past performance doesn't guarantee the future outcomes. Still, the 52% payout ratio is very low for utility stocks. Plus, the earnings per share have been steady with slight increases from time to time. This is a proof of a good financial health. Now, the reason why I'm talking about UGI is that it is at a very interesting price right now. The current stock price is $25. If we take a look at its current position in the technical chart, we'll see that it is significantly low. It seems to be having a rebound around this area. The upside potential is alluring as you can couple the dividend with a substantial price appreciation. Analysts forecast a 20% upside potential for this stock with a highest price target of $38. You should really take a look at UGI if you want your money to compound well. The second stock I would like to highlight is Pfizer. The stock has fallen quite dramatically this year, as you can see in the chart. But as Warren Buffett says, you should buy when there is blood in the streets. Pfizer remains a well-managed business. The operating margin has decreased since the last couple of years, still the company has enough fuel to get over it. Dividend yield, 5.68%. Dividend safety, 75. Dividend growth, 5% per year in the last 5 years. Dividend growth streak, 12 years. 6 analysts recommend to buy the stock and 10 to hold it. The price target of the stock is 10% higher than what it is today. Pfizer is a good candidate for a growth investing strategy. My third stock of the list is Bristol Myers Squibb, the $100 billion pharmaceuticals giant. Like UGI and Pfizer, the current price of the stock is low and seems to be at a resistance level. Coupled with dividend metrics I'll share, this company could compound your money like crazy. The dividend yield of the company is a decent 4.63%. This dividend is considered safe with a safety score of 70. The dividend growth rate is 7% per year in the last 5 years. This company has been increasing its dividends for a whopping 52 years. Even if nothing is guaranteed in the stock market, the 30% payout ratio can make you sleep well at night. The earnings per share have been very consistent and the margins safe. I really like this stock. This is it. Tell me in the comments if you own some of the stocks I highlighted. Please, like Ronald Reed, keep the faith in your investing journey. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.